Hey, everybody. This is David Underwood with the Chinchilla Picking Podcast. I'm here with Brandon Beaver. As always, we are here to hope to be entertaining, educational, uplifting, because we want everyone to make money. It is October 19th. Brandon, how are you feeling, man?
I'm good. I'm doing great.
Yeah.
Stress-free.
Stress-free?
Stress-free.
Nice. You just abandoned the rest of us, when we asked you to hang out. I see how it is.
What then?
All right, guys. We actually have a lot to get into in the show, so I don't want to fluff it up too much here. There's a lot I want to cover. There's a lot I want to get into. There's something I want to mention too, and this comes from the heart. I'm going to mention it now, and I'm going to mention it at the end. All right. So right now, Brandon and I are ready to go on the road with the Chinchilla Picking Podcast. We are looking for universities and colleges. If you have a university college in mind, if you have a club or you're part of a social club at a university college, reach out to us, invite us onto your campus. We'll come out. We'll do a live podcast. We'll do a live broadcast of some sort. We'll hang out with you guys. We'll answer questions. We'll be entertaining, educational, and uplifting. But we're going to be there. So reach out to us, DM us. We're looking to take our show on the road and see where we can go with this and how many people we can reach, because we're just trying to help. We do this for free. We do this of our own free time.
Where do you want where do you want them to email us at?
So yes, good question. You can email us currently at brandonbeaver@chinchillapicking.com, brandonbeaver@chinchillapicking.com, or DM us on any one of our social media sites. We're on Instagram at chinchillapicking. DM us there. Brandon has the stock twits at chinchillapicking. And you can find us on TikTok at chinchillapicking. Basically, you see a theme here, guys. We're the only ones with the name Chinchilla Picking anywhere. So Chinchilla Picking, look for us, Chinchilla Picking Podcast. You're going to find us everywhere. Reach out to us, DM us, email us, find us. We'll come to your college. We'll come to your university, and we'll give a talk. We'll give a speech, and we'll answer questions. All right? We'll get Brandon to come out, and that's a big deal for him, guys. That really is.
I have to find my pants first, but once I find them, I'll be there.
There you go. See? Yeah. This is what doing nothing at home does to you. All right, guys. The rules for the shows is always the same. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. We do not actually discuss it. You hear the live discussion here on the show, and you get the interaction. All right. This week I get to go first. Woohoo! Brandon, you got to wait. What I got for you guys is I got one thing. I don't kind of know what I want to go first. So I'm just gonna go with my gut here, and my gut feeling is to talk about this first. Is how I find day trades. All right. I didn't really want to pull out a particular one and say, hey, here's this one for today that I was looking at, blah, blah, blah. What I want to talk about is when you're day trading, there's a number of important characteristics to look for. First of all is how much are you working with? And the reason why I bring that up is that's going to affect what stocks you actually go into, because you want to look for stocks that have enough volume so that you can enter and exit very easily. So the more capital you're working with, it limits. I mean, you still have a lot of choices, right? But it does limit what stocks you go in and out of. Like the penny stocks are usually not what you want to go in and out of, because they're only going to average 1 to maybe 2 million shares, and you may not get out of it at the price you want to get out of it at, because you bought 100,000 shares because you're working with a lot of capital, right? So if you're working with a lot of capital, you want to be very careful as which stocks you choose, because you want enough volume so that you can get out of that stock when the price hits what you're looking for without really affecting the stock. All right. You don't want to be the one who sells, and because you sold, that stock drops 5%. No, that means there's not enough volume in there, or you have too much capital and you bought a penny stock. That's not what we're looking for here. So how much capital you have is really the first question to ask, right? So most people who listen to our show, I mean, I don't know. Most of the demographics we get back from our Instagram ads, from our Instagram, from what we see from Anchor FM and other places where we get our statistics and demographics is, most guys are retail traders. You're working with $5,000 to $10,000 at a time for each different trade. So with that amount, your options are you have a large amount of different stocks you could get in and out of very quickly. Even the penny stocks at 5,000, you can get in and out of. All right. But what you want to definitely look for is a stock that's going to have a minimum of 2 million volume for the day, because you want to be able to buy and get out, get out. Anything less than 2 million, you may not get out at the price you want. You may put that sell order in, and if you do a limit sell, it's not going to go through. Or if you do a market sell, it goes through, but at 10 cents or 15 cents lower than what you thought you were going to get it at. Thus, you're losing out on profits. So volume is key, and volume is directly related to how much capital you have. All right. So these are the basics of day trading. Volume is directly related to your capital. They're both related, but it's key to keep an eye on how much volume. Second, okay, why is this stock moving? All right. So say you found one with the right volume compared to your capital. You're good to go on that aspect. Why is this stock moving? Is this stock moving due to a macro event, right? Day trading, I want to be in, I want to be out as quickly as possible. I don't want to sit here and hold this for the long term. So I don't necessarily need a company that has great fundamentals. I don't necessarily need that. But what I do need is I need a company that has great macroeconomic news today. What is driving the stock? And is it going to drive it for the next 24 to 48 hours? That's what we're looking for. Is it going to continue driving it so that I can ride that wave up 5-10%? I'm not looking personally for another 20-80%. I'm looking for that 5 to 10%. How much can I get off of this stock right now in the short term? I don't need to ride the wave from the beginning. I just need to ride the wave at the very top and get that 5% off, get the little white part of the wave and be done, right? That's what we're looking for. So is this news big enough that it's going to continue to grow? Now, with most jumps in stocks that they jump at, say, 6 a.m. or 8 a.m. in the morning, what you're going to see is you're going to see this big jump up. I wish I could post this to you guys. I might post this on our Instagram, this chart, but there's a chart you do. It jumps all the way up, and then it comes back down. And then you see a bump up again, and then you see a bump, and then you see it come back down, and it trickles out the rest of the day. And that's a typical formation that you're going to see in a stock that's jumped pre-market. And there was some news that came out pre-market. Typically, what you're going to have is the biopharmaceuticals. They got some good news on some drug tests. They got some good news on clinical trials. They're the ones you're going to see this kind of chart with the most. But with a lot of other companies, you're going to see this as well. When I post this chart to Instagram, because I'm going to try to get a picture of this to Instagram. When you guys see this chart, you're going to recognize, you're going to be like, oh yeah, that XYZ did that the other day. And I'm like, yes, this is a common chart amongst companies that have big news in the morning. So you're typically going to miss that big jump, right? Typically. Yeah, it's very hard to time that big jump. That big jump comes in before you even know it, and it's already up. It's coming back down. So what you're looking for is that second jump up. It's not as big. It's about halfway up, sometimes a third of the way up. I want to try to catch that little bit, because that little bit typically will give me that 5% I'm looking for. Sometimes it will only give me 2%, which is fine. I'll take 2% any day of the week on a day trade, right? So that's one way to play it, right? Another way to play is you could actually play it on the way down. You could do a short sell, and you could sell it after it jumps all the way up. And when it jumps back down, after the people take their profit right away, you could go ahead and buy it and do a short sell and reverse it that way. That's another way to day trade it. There's multiple ways to day trade this chart that you see all the time. It's a very common chart. I guarantee you I could probably go into my phone right now and pull up Fidelity and look at the market movers, find some that jump today, and I could probably find 2 or 3 of them that have this chart from just the market movers today on Fidelity. It's very common. And I'll find an example of it today, and I'll pull it up, and I'll take a picture, snap it, and post it to Instagram so you guys can see this. So check it out. But that's one way to play it. another way to play it is if Apple has earnings coming up like tomorrow or the next day. Typically, you could play a move ahead of time on Apple's earnings. Everybody knows Apple's usually beats. It's not a guaranteed thing. They usually do beat though because they give out expectations that are below what they know they're going to hit. Right. That's typically what the game that Apple plays. That's another way to play a day trade is on the earnings. That's a first way people actually dip their feet into the day trading pool is the earnings. Everybody starts saying, "Oh, hey, the earnings are coming out. Let's look at this one. Can we trade this one now based off this?" And that's where you got into my rant like 6 months ago about sell the news. When were we buying the news? This is not what you do. You should be, if you're going to day trade the earnings, you want to buy it 2 days ahead of time is what I would recommend. If you're going to day trade thinking that it's going to go up because the move's already going to be priced in ahead of time and you want to sell on the news and take your 5% out, then you sell the news, you don't buy the news. That's what I'm talking about. Buy it 2 days ahead of time. Then you could get into it at that point. These are two very real ways to day trade. You always want to look at the news of the day. So the news of the day is really going to lift things up. So let's give another example. Here's a third way to day trade. I want to give multiple examples so you guys have a lot of different ideas. I'm just trying to feed you ideas so you could take these ideas and use them on your own, right? So a third way to day trade. Say the banks all have bad news. So I have a watch list that's just nothing but financials and banks. I watch that daily. Say the banks all have bad news or a couple of them do. There's some new regulation, but that regulation only affects 9 out of 10 banks. So that 1 out of 10 that went down is now a buy because that regulation is not going to affect it. That's a day trade because people are going to see this. They're going to buy into it and it's going to jump over the next 2 days. Now you can make it quick, again, 2 to 5%, take your 5%, run with it, be happy with it and day trade that. So it's basically when rising tides lift all ships, right? Or sink all ships, either way, down or up. Some of those ships don't deserve to go down or up. So those are the ones you want to look out for. And that's another way you can day trade. These are quick trades that you could get in and out of, usually typically in 1 to 3 days, and you can make a quick return. You're looking for 2 to 5%. You're not looking for a lot. But that 2 to 5% will add up if you're consistently doing this week in, week out. It does add up and it turns into big returns. I gave you 3 different ways to day trade. I'll make sure I try to post that chart tonight. Any questions, please DM us those questions. Let us know. Brandon B. Red Chinchilla Bacon or DM us on our Instagram. Brandon, any thoughts on those 3 different ways to day trade it?
You summed it up perfectly. I think that it's also, I've noticed this multiple times where there's an overreaction to the downside, even on a stock that has news related to it. And maybe that news doesn't really affect the fundamentals of the company, the way that people are reacting to it. So if there's an overreaction to the downside, and most of the time, if you see capitulation in a stock or extreme selling, it's usually going to be an overreaction. And then you can buy it at the day's end and then sell it the next morning for a pop.
Hey, I'm not that smart. You got to define capitulation for me.
Huge selling to the downside, like a straight drop. Panic.
There you go. Yes. So I got that from Larry Kudlow. So Larry, and I'm going to do a quick story here, guys. Larry Kudlow, I used to watch his show all the time back in early 2000s. I think it was 2004. I started watching him really, every single week in, week out. And he would get all these, Brown professors, Dartmouth, all the big financial colleges, they would get on there and they would use these 12 decimal words. And Larry would always stop him and say, hey,
12 decimal.
Right?
They singing it?
Yeah, they would sing it loudly, right? Or whisper it, or 12 syllables, 12 syllable words. And Larry would interrupt them and say, excuse me, but I know most of my listeners are the working men and women of this world who are trying to grow their investments and change their lives and get that second income. Can you explain this in layman's terms, or do you not really understand it? And that's what he would challenge these professors with. Can you explain this, or do you not really understand it? And so I appreciate that. And I like to always try to keep it that way. I don't want to feel like I'm talking down to someone, but I like to try to explain things in a way that everybody can understand it, because I want to help people. I don't want to confuse people.
Technically, capitulation in the stock market is bulls giving up their gains. So they're surrendering to the bears, but it's panic. It's panic selling. That's why they're selling the stock, and there's not really any rational thought put into it. It's just they're scared. So
there you go. All right. That's my my thought there. I want to talk a little bit about Netflix next, Brandon, if you will. Let's go into some earnings news, right? I got some numbers to read. Let me read these numbers and then we'll discuss amongst ourselves. All right. So Netflix, their quarter subscriber growth, they had 4.4 million people. They were only expected to get 3.84 million people. So it was a surprise growth to the upside that of 600,000. Revenue was 7.48 billion. Expected was 7.48 billion. So right in line, perfect there. EPS was higher. So they had 3.1 per share versus 2.6. My question is, with revenue being exactly where it is, where did they get the extra cost savings? Where are they trimming? Where are they trimming that they're getting the extra cost savings, or are they just charging people more and we're not aware of it?
they did raise prices, I think, last year.
I did not get a raise in my price.
I thought they did. I don't know. I don't really pay attention to how much I pay for it, to be honest with you. But
Right?
I thought they had a price raise. I thought they increased prices or added another level of membership or something like that.
See, so they got extra money from somewhere because the revenue was right in line, but they beat on profit. So they had some cost savings somewhere. I would like to see more in-depth analysis, which I did not get time for today, but of where they got their cost savings at. Where did Netflix, work this out? I didn't notice an extra payment or anything, an extra $2 a month or anything that I'm paying, but it's only.
They've had
Go
more.
ahead.
They've had more members sign up, and the membership beat expectations. Primarily, I think because of Squid Game and the Dave Chappelle special.
Yeah, it's funny how that worked out for Dave Chappelle's special, but Squid Game has definitely seen a rise in membership there. People are really loving that show. Well, anyways, Netflix has changed how they report their metrics from views. So they used to do it how many views, right?
Mm-hmm.
So if you watched a show for 2 minutes, they counted it as a view. And the shows with the most views were in there as number one, right? Now they're going to go back to how everybody else does it, which is total hours watched. So that's going to give you a different metric of which shows are actually number one and which shows are actually not number one. So we're going to see a change in that over the next 30 days. So it's going to be interesting to see how that changes everything in their top 10, quote unquote. Because I wonder if Squid Game was actually number one for that long time, or if there was just people watching it for 5 minutes and then saying, no, I don't speak Korean.
I don't know. Well, there's like over 100 million households that tuned into it, which is huge.
That is huge. It's a massive amount. I mean, when Netflix has a hit, they get a hit, dude. Mm-hmm. They go all out here and they get hits, but then they have a lot of swings and misses too. So, I guess they're like Babe Ruth. Either they're striking out or they're hitting a home run.
Yeah, and Hastings, he's not afraid to strike out. He said that before. He'll put content up and just see where it goes. Kind of
see, and I admire that. I admire anybody who owns a company or runs a company and they're not afraid to make a mistake. Yeah. That to me, that's leadership. That shows you're trying to innovate. That's true innovation. You're trying to really grow something there. You're not just sitting back and like resting on your laurels and just trying to get by. You're actually moving ahead and raising that bar and pushing it further on the road there. So I appreciate that.
Actually probably would have been a good play for one of my credit spreads because it had an 8% implied volatility. And right now it's actually down 0.81% after earnings release. So It didn't go up or down as much as people expected. And that's kind of the norm if you're playing these earnings reports, and you get that 8% implied volatility. Every once in a while it'll hit, that top line, but oftentimes it doesn't get anywhere near, because people get too emotional about things. They get too irrational, they get too excited, or they get too negative.
I've seen a lot of too negative lately, but yes, you're right. You're right. One thing I do like to mention, and this was also in I read 3 different articles from 3 different companies on the Netflix earnings today, and they all did touch on this at least a little bit. And it's something we've touched on here on this show, Brandon. Can you guess where I'm going with this?
Inflation?
No, gaming with Netflix. Gaming. So Netflix still has a focus on growing its gaming sector of the business. They have actually begun testing this in some countries, not the United States, but in other countries has begun testing their gaming section. They will not include ads or in-app purchases as of right now in any of their games. And I wonder what kind of games. We still have not heard what kind of games are they offering here. I mean, is it like mobile games, or is this going to be like actual console-like games, or what kind of games are we talking about?
They've had some choose your own style shows, like choose your own adventure.
Yeah.
So,
So it makes me wonder where they're going with this. Is it Candy Crush? Am I going to do Candy Crush on Netflix?
There was a Black Mirror episode that like you made decisions in with your TV remote. I don't know. I don't think that's completely the way they're going, but you'll probably see more of that because it was kind of popular.
Well, yeah, people want to be immersed. I mean, that's why, again, here I go with VR again. That's why VR is jumping up, is people want to be immersed, man. People want to be part of the spectacle. They want to be in Squid Game, but they don't want to get shot and killed. You know what I mean? So, if I could put on a VR suit, which now you can, guys, $20,000. But if you put on a VR suit, plug in there, I could be part of the whole Squid Game feel, right? That's where we want to go with this. I mean, they got a Patrick Mahomes NFL football VR experience now for $20 you can buy on the Oculus system.
Wow.
Yeah, Patrick Mahomes put his name out there. I looked at it, guys. All right, look, I know VR graphics are not as up to par as what people expect out of graphics nowadays, right? But you have to understand, when you're making a VR game, it has to be an actual 360-degree world that you can interact with. It's a real world where you have to create. You can't have like 2021 graphics. You have 2019 graphics. Usually it's a couple years lag, right? That's usually what you're seeing. It's a few years lag on this. No, this wasn't even that. I can't believe Patrick Mahomes put his name on it. This was like 1989 Tecmo Super Bowl. All right. I was not impressed at all with this. And I'm a big pusher of VR. I was not impressed with this. I don't know if anyone's going to reach out to me from Oculus about that. I doubt it. But like, come on, guys. You can do better with the graphics, especially if you're going to have an NFL player put his name all over it and say it's his experience. I don't know, man. I wasn't impressed. So we'll see.
I just bought Madden.
yeah. Madden 97-ish
in the game.
What you would see. Yeah, right. And just buy the stock. It's gonna go up. But there you go, man. That's all I got. So I'm gonna pass this torch over to you, Brandon. With one last thing. Well, one last thing. My stock twit of the week, if you will. I don't even know how to pronounce that, if you will. This I found this funny, and I read this to Brandon right before the show. I probably shouldn't have read it to you. I should have waited, But anyways, this is the one I found. Being a bull is the noble way.
Being a bull,
right? Short profits should be taxed 90%. This is what somebody posted online. These guys on stock twits, I don't know. They make me laugh. Here's another one. Who remembers on a red day, the only thing we talked about was pineapple pizza? Yeah, that's how much we care if it goes down. LOL. These people are crazy.
Not a red day today. Was it the S&P?
That was AMC. Those were the AMC stock twit people. That's why. They always have good ones. I
Yeah.
mean, not stock picks, but they have good tweets.
Clearly have not read my article on chinchillapicking.com about how to pick a stock.
Right? I'm still waiting for the credit spread one. I've been holding my breath.
Netflix would have been a good one for it. I will post it soon. I will post it soon.
All right, Brandon. All right, what do you got for me, man? What do you got for me?
P&G earnings were this morning, and I'm just gonna go a little bit into this only because it was news when they started talking about inflation and about how it's pressuring gross margins and stuff like that. P&G earnings has a price to earnings ratio currently of 25, which is right in line with their historical comparisons. Organic volume growth was 2%. Core EPS growth was -1%, and they blame that on inflation pressure. Expected earnings per share 1.59. It actually came in at 1.61. Revenue expected was 19.89 billion. They reported 20.34 billion. So overall, okay results at a fairly valued stock price, but I don't buy okay at fair value. I don't even buy great at fair value. I want to buy great at great value. This company here, they've got a great gross margin at around 50%, excuse me. And the return on equity is 30.8%. So that's good. That's really good. I would think about buying this stock at around $120, but that's 15% lower than where we're at right now. So at this point in time, I'm not touching it. Go ahead, Dave.
So, I mean, you touched a little bit on someone mentioned something about the inflation having an effect on the overall stock price. I believe equities right now with inflation continuing on, this transitory just continues to transitory. Anyways, inflation continue going on. Equities are going to see some movement up just because the dollar is worth less. So not worth less, but like worth less. So because of that, the company's value based on the US dollar should be more. So they're going to see a rise in the price just because of inflation alone.
Well, it depends. I mean, you don't want inflation over 5% for any significant period of time. Over 5%, then earnings start getting eaten up as well. It starts to become a problem with the earnings because they become worth less and less and less and less, unless the company has pricing power, which is why you want to be picky. You want to be picky with the companies that have low debt and therefore low cost of debt and pricing power so that they can raise prices with inflation to keep up with it.
Gotcha.
About above 5% for any significant period of time. That's when earnings start to take a hit. 6% that's really bad.
So we should be seeing earnings take a hit here soon then. Based on what you're saying.
Use above 5%, then yes. And that's why I'm saying be picky here, because you really don't want a company with a bad debt to equity ratio.
Isn't P&G though pretty spread out in the diversity of its products and their core products that people need every day?
Yeah, and I think that's why it's up to a fairly valued stock price right now, because it's been bid up to that point, but I think we've missed the run here.
Gotcha. So you're waiting for a pullback before you get in, and that's why you said the price target you did. Gotcha.
Yep. Because if the market takes a hit, if the NASDAQ and the S&P start to trade lower and there starts to be panic, they'll take the good companies with them, but the good companies will rebound faster and better. So I was scrolling through stock twits today.
Oh, you found one too? What'd you find?
And I really didn't find any particular tweet, but then I made the mistake after that of getting on TikTok. I mean, you see so many younger traders, and some of them are probably pretty good, but I have to tell you, like, they're trying to sell, get rich by tomorrow, get rich by next year. These are pipe dreams that aren't going to come true. You don't need to have 8 monitors on your computer desk to be a good day trader or swing trader or investor.
You know what? To be honest, you could be a good trader or investor with just your phone nowadays.
Yeah, absolutely. That's where I conduct most of my trades from now.
Yeah, I mean, I do use my laptop for a lot of things, for desktop views when I want to read analyst reports and go in detail on that those items, because I do get more information that's not on my phone versus. But other than that, 90% of it you can do on your phone.
Right. Yeah. So, I mean, I don't want to say fraudulent, because there's a lot of guys and girls that get really lucky in options trading or in stock trading for the first 6 months. And then they think they're better than Warren Buffett. They think they're better than the best of the best that have been around and have a track record. And eventually, I mean, the ending often isn't good for them, nor is it good for their followers. So I just wanted to bring this up. I want to talk a little bit about what I care about and what I don't care about in the market, just as you were talking about like your day trading thing and how you day trade. I want to talk about, because mostly what I do is I swing trade. I wouldn't say value stocks, but stocks that are at a great value, because I don't really like put that distinction on stocks anymore, whether it's value or growth, because you can get good growth stocks at good values if you're patient enough and you wait for the price to hit where you want to buy it at, you know? So here's really what I don't care about, because I pulled this up on TikTok, and a guy talking about a website that you can go to where you see the highest insider trades and you copy their trades. And it may work for somebody, but I mean, I've never seen it work personally. So insider trading, and basically what I'm talking about is the legal sense of insider trading, where an insider of a company has bought or sold its shares, right? So back in August, for example, Tim Cook sold over $350 million worth of Apple stock. Now, why don't I care about that? Because I have no idea why he sold those shares. Now, there's an exception to this. If I see a CEO dump shares right before the company announces it's going to sell new shares into the market, my red flag will be forever raised on that CEO. I also don't care what TV analysts are saying, with the exception that I sometimes get to take advantage of them publicizing lies or even outright fraud that may not be, caught by the SEC. But if you're keeping your mind about you, you can spot these things, especially if you start to learn how to read income statements, cash flow statements, and balance sheets and things like that. Then you'll know if what somebody is saying about a company isn't true or if it is, right? So in the show notes page here, and this is something that I'm going to get into probably more in depth in coming episodes, I answer the question, what do Jim Cramer, Bernie Madoff, and Michael Milken have in common? There's an 80-page, 15-chapter complaint in the SEC's website that I stumbled about the other day. I'm going to post it in the show notes page. And then after I have more time to read more thoroughly through it and gather my thoughts on it, I'm going to talk a little bit about that more in future episodes. Basically, this was Jim Cramer coming out and saying that a particular company in biopharma had submitted treatment for prostate cancer and that it was being rejected by the FDA. And they were like 2 years away from even submitting this to the FDA. It didn't even happen. Once it did, it got accepted. It got approved. And this was after multiple times of Cramer coming on CNBC and saying that there was no way it was going to be approved, that it was terrible, it was a battleground stock, and just driving the stock down. And short sellers attacked the stock so badly, it almost bankrupted them. Meanwhile, the drug came out, it saves lives. It's a great drug. There was actually like all of the stuff that was being said was complete lies. So I'm going to post this. I want you guys to go to it. I want you to read through it yourselves, because that's very important, because you need to know who you can trust. You need to build track records with people. That's why me and Dave are on here every week. That's why we're doing this for free, because we want you to trust us, but we want to earn your trust. And we don't have any hedge funds that we're associated with. We don't have any big money corporations funding us. That's the great thing about this medium of podcasting, that we can do this without having any conflicts of interest.
Right. But if some big hedge fund wants to give us money, I'm just saying. No, I'm just kidding.
Well, I'm not going to repeat I'm not going to say anything they want me to say just because they want me to say it, even if they did do that. Right. Also, what I don't care about, most YouTubers with hundreds of squiggly lines on their screen. You don't need 8 monitors, like I said, to be a successful investor or trader. If the charts they're using look confusing and are hard to understand, it's likely because they're charting and doing too much. You do not need more of a handful of indicators, and they need to work together. They need to complement each other. Go ahead, Dave.
Right. So I always give this example about what you're talking about right now. Well, the example I give is when you're ordering coffee and you get up to the line and you're like, look, man, I like the triple flip with extra whip and double shot with the Soca Mocha cream added into it, and then extra light with no sugar. You know what I mean? And then, that's the kind of trades you're trying to make. You're trying to overanalyze and you're trying to beat the market. All right. I'm not trying to, the best way to do it is to keep it simple and not try to beat the market. I just want to take the top of the wave, man. I want my coffee black. I want black coffee.
Right.
Buy and sell, buy and sell, buy. And that's it. Keep it simple.
Sure.
Sorry.
And that's fine for momentum trading. I do like to try to beat the market personally, but it doesn't bug me subconsciously if I don't do it. But that's part of the reason why I trade in such a contrarian way and I try to find bottoms and things, because I'm not trying to personally, and this is where we kind of differ a little bit. I'm not really riding trade like the trends so much as I'm trying to like get behind them. And I found certain ways that work. But what's interesting is they deliver me, oftentimes a trade will deliver me that 2 to 5%. It's almost right in that range every single time on a trade, right? So what I do care about and what I like the MACD, the RSI, simple moving averages, the Bollinger Bands, and the Keltner channels. And I'll tell you why, okay? We'll go into a little bit about what each of these are. And then at the end here, I'll tell you why I like to use them together. All right, so the MACD, moving average convergence divergence, is calculated by subtracting the 26-period exponential moving average from the 12-period exponential moving average. Now, the MACD triggers technical signals when it crosses above or below its signal line. The MACD helps investors understand whether the bullish or bearish movement in the price is strengthening or weakening. The RSI is the relative strength index. It is a popular momentum oscillator. It was developed in 1978. The RSI provides technical traders with signals about bullish and bearish price momentum and is often plotted beneath the graph of an asset's price. An asset is usually considered overbought when the RSI is above 70% and oversold when it is below 30%. And then the Keltner channels. The Keltner channels are volatility-based bands that are placed on either side of an asset's pricing and can aid in determining the direction of a trend. The exponential moving average of a Keltner channel is typically 20 periods, although this can be adjusted if desired. The upper and lower bands are typically set 2 times the average true range and below the exponential moving average, although the multiplier can be adjusted on a personal preference. The average true range is actually a market volatility indicator used in technical analysis. It is typically derived from the 14-day simple moving average of a series of true range indicators. So I like the Keltner channels here, and then they do something similar to the Bollinger Bands. The Bollinger Bands are a technical analysis tool developed by John Bollinger for generating oversold or overbought signals. There are 3 lines, a simple moving average in the middle, an upper and a lower band. The upper and lower bands are typically 2 standard deviations from a 20-day simple moving average, but can be modified. And a simple moving average calculates the average of a select range of prices, usually closing prices, by the number of periods in that range. Now, I said I like to keep it simple here. That all sounds very complicated, but once you actually chart that, it's not. It's really not. And I'll explain.
What do you mean by chart that?
When you add them to your chart. So if you're on like the Thinkorswim app and you select to have that placed onto your chart, you've only got 5 indicators here, and they all work together to tell you sort of the same thing. Now, the Bollinger Bands if a price dips below that band, it's indicating an increase in volatility, which is you'll see the both bands expand because they're going to expand because it's indicating potential, increase in volatility. And if it dips below the band, that's oftentimes an indicator of a upcoming downtrend. The Keltner bands do the same thing, but I use them both because they kind of just they complement each other, right? So I've seen so many times where price has dipped below the Keltner bands, and then it just comes right back up, and then it's fine and moves sideways for a long time. So it really didn't tell me anything. But if you're using the Keltner and the Bollinger bands, they're kind of complementing each other and confirming what the other one is telling you.
Gotcha.
Does that make sense?
It makes sense to me. I think a picture example of what you're looking at too. Also, if we could post it to Instagram, would help.
Put it on the website for sure. And then this is where the RSI comes. RSI is what I meant to say. This is where the RSI comes into effect here, because if you got it dipping below the Keltner and the Bollinger bands, but the RSI isn't oversold yet, then you've probably got a downtrend coming. Like it's just telling you if this isn't quite oversold yet, there's more room to run on the downside. And then you could do the same thing on the opposite. If it's going up above the bands and we're not quite overbought yet, maybe more room to run going up as well. Now I'm using the MACD here in conjunction with the Bollinger bands and the RSI. And usually what I'm doing here is to find a trade. I look at a predictable MACD. I want a company that has a predictable MACD. I don't want choppiness. I want a nice, smooth, predictable movement. And I'm looking for the MACD to be below the signal line, but starting to curve upwards. Now I want the RSI to be below 30 in the oversold zone, and the lower Bollinger band must be level. It must be starting to level out, because if you've been on a downtrend and we're trying to capture, the bottom here, if it's been on a downtrend, then what winds up happening is that lower band starts to curve and go flat near the bottom. So that's what I'm looking for. I want that lower band to curve and start to go flat. And the goal here would be to catch a reversal and the MACD crossing over its signal line, which is where I'll often sell. Now, I went on these trades roughly about 70% of the time, generally take somewhere in between 2 and 5%. This can take me a day to happen sometimes, or it could take me a week. But this is a swing trade. This is how I swing trade. And I set my stop loss here at around 2%. If the stock goes below that, I cut my losses. Now, the great thing about understanding what percentage that you usually win by is that if you cut your losses at the same percentage, all you have to do is win 51% of the time and you stay in the green.
Yeah, that's true. And that's a very small stop loss, man. 2%.
Yeah.
I mean, you're not getting much drop at all before you're selling getting out, dude.
Yeah, it could, but the thing is you're cutting it and you're knowing when to take those losses. There's some exceptions that I've had. Our Facebook trade that I recently made that wound up making about 2%, maybe just a little bit over it. I think we're down 2% on that Friday, but the MACD was telling me that the selling pressure was still continuing to go away. It was lessening. And so I decided to keep us in that one.
Gotcha.
So there are some exceptions to it, but this is just my general rules here. Now, investments are a little bit different, right? So investments, what I care about are valuations, price to earnings, price to books, etc. Now, I'll still use my charting that I do for trading because I like to catch these bottoms, and I like to have, I like to buy a stock, and then even if I'm holding it for a long time, like a couple days later, I'm up a couple percent or maybe even 5%. That's great. I love that. So I'll still use the charting methods, but I'm not going to sell on that crossover. I'll wait and sell once the stock is overvalued. So in investing, it's valuations, it's price to book, it's does the company have sufficient net income to pay off its long-term debt in 4 years? It's over the past 5 years, has the company been historically generating cash and equivalents, gross margin above 40%, return on equity 15% or better. That's the stuff I care about with my investments. So I kind of tie it all together with the investments. You know what I mean? I do want to time. Who doesn't want to time? everybody says don't try to time the market, but timing, it's like one of the most important things that you're doing.
Yeah, I mean, you what they're trying to say is, as far as timing is you're never gonna. Usually, you never get the exact bottom or the exact top, right?
Yeah.
That's what they're talking about. So, yeah, you're right. You do want to try to time it because you want to try to buy the stocks when they're undervalued, and then when they get to their value, you sell and you make your money and you get out. And that's what this game's all about. It's as simple as that. I mean, there's guys. I mean, you've heard two different approaches in tonight's podcast, and both work. Both will make you money. And it's just up to you as to which one appeals to you. What I have found, Brandon, is that people who are swing traders usually aren't good day traders, and people who are day traders are not good swing traders.
Yeah.
It's you find your camp and then go make camp there, because that's what you're good at.
Well, you know what? I did okay during the COVID downtrend on day trading, because it was so easy to do.
It was. And then see, this is why people, well, look how much money I made in 2020 trading. I'm like, dude, anybody, if you threw a dart and to pick your stocks, you could have made money day trading in 2020. Yeah. It was easy. That's the easiest year of all stock trading I've had in my whole career of stock trading. Easiest year ever. Any fool could have made money last year. So I mean, to me, it's like, show me more than 2020. Come on.
Yeah. And now if you go to chinchillapicking.com, look at this article that I wrote, how to pick stocks. That's the hard part, is learning how to find an investment. That's the hard part. Knowing when to buy it comes a little bit easier, as long as you have discipline, right? So
yes.
Great buy at $318 a share a few weeks ago when we were talking about it on here, right?
Yep.
Now I'm kind of iffy on it. I still hold it myself, because I still see some upside. But if you're buying it now, you've missed a couple percentage points. And if you're trading, you probably want to, hold off on that, let the train go.
Yep.
Same thing with Taiwan Semiconductor. We bought, and I called it a buy around 108 right before earnings. I think it was last week, and now it's trading around 116. Right?
Oh, yeah.
So, yeah.
Mic drop.
Good times. If you're trading, you probably want to wait those out, right? You might have missed the train. Who knows? Funny, because 3 weeks ago, Jim Cramer was saying, well, I don't know about Facebook. I'd buy Microsoft instead. And Microsoft did go up. I will give him that. But Facebook was a buy at its 200-day moving average, which was 318.
I don't think you like Jim Cramer. I just don't. I don't think you like the guy.
Oh my gosh, you have to go and read this SEC report. It's All
right. Before we do final thoughts, I do want to mention one more time, guys. If you have a university or you're a member of our club and you want to have us come there, it'll be free. We'll come out on our own dime. We'll come out there on the weekend. We'll do a live podcast or a live show or a live social media, whatever. We'll find a way to do something live, right? We'll answer questions. Maybe we'll bring some chinchilla picking merch and we'll hand it out, sign it, do what you want to do, and we'll be there. This is what we're trying to get out. We're trying to reach people. We're trying to help as many people as possible. Let me give you my final thoughts, and we'll give Brandon the last word of the night. My final thoughts, guys. Netflix. I don't know, man. I see upside because I like the way they're making shows and content right now, and I believe it's going to be working them for the next foreseeable future. And if they can actually get the gaming thing to work, they have a bright future there as well. So is there upside to Netflix? Yeah. I think it's already took its jump up today though. So as a day trader, I'm good. I'm watching it right now. I'm watching it, waiting for a dip down and an opportunity to trade it.
Yeah. It ran 8% into earnings.
Yeah.
Like that already into earnings. So that implied already played out already.
Yeah. So, and you never buy the news, guys. You sell the news, right? Like, come on now. Don't get me on my soapbox there about that again. But pay attention. I give you a few ideas for day trading. Reach out to us if you have any more. Brandon, last word's yours.
Yeah, you know what? We both went into this episode. We didn't really have any, we didn't have any buy ratings or anything like that. Mostly for me, that's because we already set everybody up. If you've been listening to us, you've already been into the stocks that are running right now, and you don't really have to buy anything at this point in time. And, if you're using the rules that me and Dave have set out here, depending on what style you decide to go with, then you're going to have cash on the side when the next downturn comes around, or when your favorite stock gets beaten down for no good reason. And then you'll be able to buy those stocks as well. But, everything that we've talked about, my buy recommendations and Dave's buy recommendations for at least the past few weeks here, they've already been on runs. So I'm not going to repeat the same buy. I don't want you to buy into Taiwan Semiconductor. If you would have listened a couple weeks ago, you would have bought in at 108. I think it's important for people, once you see our episodes published, the timing, I just talked about who doesn't want to time the market, right? I think timing is very important. And once you see these published, you need to listen to them right away, because timing is very, very important.
There you go, man. All right. So as always, we've
around to that one. Sorry.
It's all right. As always, we've been entertaining, educational, and uplifting, because we want everyone to make money. Have a good night, guys.
Have a good night. If you've listened to our podcast before, you know that we are good friends with the Money Vikings, and we think that they have a lot of good knowledge and, just a wealth of knowledge to offer. About 60 years worth of knowledge and trading experience between the three, between Greg, Bob, and Jerry. Now, I have some good news for you, because they have announced a premium program. It's the Money Vikings MVP premium content. Okay? And I have to tell you this right now. If you are new to the market, you have got to have somebody to mentor you through it, because 75% of all new market entrants will lose all of their money in the first year, and you have to have somebody that will guide you through it to prevent you from making these mistakes that most people do. And with this MVP access, this premium content, you will get direct access to Greg, Bob, and Jerry on Discord. That's the most important feature of this program, in my opinion. They do also have access, they will give you access to other things, such as hot trades, weekly newsletters, technical analysis. Hey, it's ad free. That's cool too, right? Guides and tutorials, tools and custom technical indicators, exclusive analytics and informative articles, and then, as I said, exclusive direct access to Greg, Jerry, and Bob, who have over 60 years of experience between them. Now, if you listen to this podcast, you need to get a pencil, and you need to get a paper, and you need to write this down, because you get 25% off. Once you go to moneyvikings.com and you sign up, you'll get to enter in this code. It's capital TMV P1CK1NS. That is all capital TMV P1CK1NS. An easy way to remember that is TMV Pickens, but the one replaces the I. So go to moneyvikings.com, claim your discount for being a Chinchilla Picking Podcast listener, and conquer your financial freedom.